All right, Mr. Jay Woods, CMT from Freedom Capital Markets. How you doing this morning?
Hey, I'm doing great. Thanks for having me back.
Of course, we love having you on here, Jay. A lot has happened since last time we spoke. Of course, you go back a couple Mondays ago. It was our version of the Black Monday. It was the Japanese yen carry trade that lasted all of about 24 hours. Walk me through what your thought process was while this was going on, and where do you think we sit now?
Yeah, we're kind of back to where we were before that even happened. When
Yeah.
I see the VIX spiked above 60, yeah, that was crazy. Put that in perspective. It was the third highest reading we've ever had in the VIX, and then it was bigger than 9/11. Like, are we serious right now? I know we shut down for 4 days. Maybe that calmed the VIX down a little bit, but my God, there is panic, there is fear in this market. People are jittery, and to think that we've gotten the all clear with this nice rally, which hey, I think we overreacted clearly on August 5th, but we got a lot of things we're going to focus on and seeing some headlines that may come up. We'll talk Jackson Hole in a second. We'll talk about that September 18th meeting. We can talk election, but I don't think this is an all clear. And you may hear a lot of technicians come on and say double top in the next few sessions here with you guys. I don't look at it as a double top. I look at it as consolidation, and we'll hit some resistance levels. Maybe we will make a new all-time high if Powell says something we don't expect. That would shock me, to be honest with you. But yeah, that August 5th moment, there were a lot of factors in play. Geopolitical concerns over that weekend. Harris getting even with Trump in the polls. And then we had that unemployment number on the Friday beforehand that kind of basically affirmed that the Fed screwed up at their last meeting and they should have cut rates when they didn't. The minutes basically told us that yesterday. Like, it was a coin flip. They could have cut rates last time. They didn't. Now we know they're going to cut. The question is, when he telegraphs this tomorrow, is it going to be 50? Because I think the market's anticipating more than a quarter point cut as early as September, and I don't think they're going to get it.
What are the odds again, AB? Bring up that chart while I'll ask Jay just to
It's
further
like
on
a
that.
third, two-thirds, a third
Yeah.
for 50 as of yesterday. I mean, that thing changes like the wind.
Yeah.
But
So
yeah,
I mean, if he comes in dovish and starts hitting about 50, we could get a rip roaring rally on that. So maybe that is what we're looking at for tomorrow is really the commentary. Are we getting 25 or 50? Because here AB just brought up the current odds is 28.5% for a 50, 71.5% for a 25. It's zero for nothing. So we've already completely baked in at least a quarter of a point, and there's still 28.5% of people who are holding out for a half. So let's just take away from the recent rally. Are we now like green light for stocks overall, like going into next year, if we're really going into an interest rate environment that's going to be more accommodating for stocks?
well, long term, yeah, I think we are.
Like here,
Just
take off the short-term rally. Yeah.
yeah, exactly. You take off the short term rally. I think everything technically has played out the way it should in an election year cycle, in a seasonal cycle. August is up slightly right now. We haven't had an up August September stretch in over 3 years. We'll see if we can break that string. I don't think we will by the end of September. Most markets bottom in October, and then you talked about the VIX. I went back and I looked at 2016, 2020. 2020 was COVID, so it's a little skewed, but the VIX had spikes in both those years early on, and then September, and as we got close to the election, we had another spike. So I think these headlines are going to cause a little angst, and I don't think it's all clear right now. But once that election is settled, go back to 2016. Controversial election. Trump was involved. 2020, controversial election. Trump was involved. Didn't matter what the outcome was. We rallied from election day into the end of the year. And I think the setup is there. And then you look at the earnings growth story. I mean, when Walmart and Target are doing what they're doing right now, the consumer's doing okay. It's not the ideal leadership. What we're seeing is a pause in those Mag 7 names. And I know next week, I have a feeling you're going to talk about NVIDIA a little bit. I don't know why I have this premonition. Yeah, but let's see what they do. Last August, NVIDIA was the tell to me that the market was changing. It had its best quarter ever. It gapped, and watched Friday in the market, just like I watched NVIDIA on that August of 2023. It gapped on the open and the gap filled, it closed up a dime, and then it went down from it was trading in the 400, so it would be 40 now. From 480 down to 400, it chopped sideways, worked its way up, and broke out in January. We're seeing consolidation in those Magnificent Seven names right now. Will this be enough to break it out? We saw that happen in Walmart. I don't think it's going to happen in NVIDIA next week. I hope I'm wrong. But yeah, it's an interesting time where the leadership, staples, utilities, the equal weighted S&P 500 is outperforming the Magnificent Seven for the first time in a long time. So this is healthy, but it's not sexy. And, sexy, VIX, you get more clicks and sexy sells too. We may not get sexy until the end of the year.
Clicks.
So
I never heard that one.
The higher the VIX, the more the clicks. You've never heard that? That's as old as
That's a new one, man. That is Jay, Philip Hugh mentions here in the chat that, we are coming into an election and, the Fed is supposed to be, just focus on, its dual mandate. And maybe me and Phil are the only one, thinking this, that, no rate cut at all. I mean,
there's zero chance of no cut. He's going to cut, and he should have cut last time. And yes, people will say you can't do this during an election year because whatever happens, one side of the aisle is going to condemn him for not cutting. The other side is going to condemn him for cutting. You're making this party look good right now because the market's getting that tailwind. Well, guess what? It's already baked in. I think, and I hope I'm wrong, but I think we've already bought the rumor. And what's the other side of that old adage? Sell the news. And I have a feeling we're going to get a sell the news event at first. But I think, you look at the data, when we cut rates in a non-recessionary time, and this is not a recession right now, I'm sorry, but it is not, the market will rally 3 months later, 6 months later, 12 months later. And what is the one sector that does really well? Small caps. And I've been early to this party. I know I've touted small caps, and I'm getting my head kicked in by a few people, and deservedly so. But small caps have yet to make that all-time high. They got a little way to go, I think 10%. But when they move, as we saw in the beginning of July when we had the rotation, they move quickly. It happened October 27th to December 23rd last year. They were up 27%. So the setup is there for small caps to finally catapult, and people just rush into that trade. And I still think there's a leg there. And historically, when you do start to cut rates, and he's not going to cut 50, I'd be shocked, especially in an election year. Now, go ahead. You want to add fuel to this political narrative? Cut 50 points. People are going to, on the right-hand side of the aisle are going to be like, what are you doing? But you mentioned it. You mentioned he was late. He was late when we started raising rates. He is late now because we should have had a quarter point cut. And I go back to July of 23. That last quarter point hike was so unnecessary. He could have eased off on that and, kept it at 5% and see where we go. But the Mr. Data Dependent, Jerome Powell, he is probably just going to test the waters with 25, see where we go. And I would be shocked, if we got maybe one more at the end of the year. I'm not in this camp that they're going to cut. I don't see the need for that right now.
25 and then maybe another 25 and done.
Yep.
Because some people are calling for 50, 50, 50. I've seen I'm like, are you crazy? There's no way that's
these are the same people that called for 6 in the beginning of the year, and that's when the Russell took off.
Emergency
and then
rate cuts.
Yeah. Well, that was the other thing. Now emergency rate cuts because we had one bad day. That lasted all of 24 hours, as you mentioned, and cooler heads have prevailed. And, thank goodness, the Fed did not jump to do something, because if you have an emergency cut, when did we have an emergency cut? COVID. Guess what? That was an emergency at the time. If you remember, people were dying. We had no idea what was going on. The Japanese yen carry trade? No, I'm sorry. I mean, I'm not too astute in exactly what could be the ramifications of that. I think there could be another, shoe to drop there. Did it resolve itself in one day? I don't think so, but we may see more headlines there. And the market is still jittery, going back to my original point. But let's look at some charts. I see you got some fun charts up there. We can talk economic policy. Yeah.
So speaking of the chart, Jay, I mean, it looks like as we're running up on this, Fed decision on the 18th of September, the S&P 500, the overall market, we could be at this inflection point where we're kind of creeping back toward all-time highs. It could, some people with a bearish outlook might say it looks a little double toppy. Other people might say we're prone to break out. Which side of the aisle would you find yourself on?
Yeah, near term, I'm in the camp. If you were smart enough, which most of your audience probably was, to buy stock on that dip on August 5th, you got to lighten up a little bit because we are at an inflection point. I think we could have a near-term double top and a chop, and we go sideways. We could have a 5% correction. That brings us down to, 5,200? That's not out of the realm of possibility. We got there in 3 days before. So I don't expect us to explode upward immediately on that initial rate cut on the 18th. I don't think he's going to say anything at Jackson Hole tomorrow that's going to cause the market to explode. Watch how we close. If we do get a pop, see if we can hold it into a Friday close coming into the end of August the following week. I'd be surprised, but we'll see. The one stock, and I hate to put it on one stock, but NVIDIA, let's see if that can get back to that 140 level as we go into earnings and eclipse it and hold it. I don't see it happening, but it very well could. But if it does, then oh my God, the leadership is there, and it will take a lot of boats with it, and the boats that are important because they're the largest market cap stocks. But right now, no, I think we're near term. Let's take a little off the table, see how this shakes out. And if I miss the initial move out on a breakout in the S&P 500, I'm not afraid to chase with stops in place because you'll have that risk reward setup where, if it's a failed breakout, you want to get out quickly.